Person to talk about this than Scott Bauer. He is our guest for Options Insight today. He's joining us as Prosper Trading Academy CEO. Thank you so much for your time. Answer that question for me, if you will. We are seeing this new elevated VIX. Is that the new normal as we stay above 30?
You know, it's really interesting because it is elevated, but you know what? It's not elevated enough given the intraday moves that we have seen. Now, when people look at the VIX, they always think about it. It's the fear index, it's the volatility index. But a VIX of 30, Creedy, represents a 1.5% intraday move in the market. So we've been getting 2.25%, 2.5% moves on an intraday basis. So one of two things has to happen, in my opinion here. VIX has to escalate again, closer to maybe the high 30s or 40, or the market is going to start calming down a little bit because they always converge. The VIX and the market always converge. And when it gets out of line, whether the VIX is too low or the VIX is too high, you see the market then come back into line. My gut feeling is we're going to see the market starting to calm down, and we're not going to see these 2%, 2.5% swings in a daily basis that we have been seeing recently.
So you said the market's going to start to calm down. Well, talk to us about what's actually going to make it calm down. You do still have a very hawkish Fed on the horizon, that March 15 meeting getting closer and closer, in addition to the geopolitical risk that seems to be something that's going to be sticking around for a while. What exactly is going to be the driver of perhaps the calmness you're going to see when it comes to volatility?
So when I talk about calmness, that doesn't necessarily mean that's a bullish thing. That doesn't mean the market's going to go up. The market can still go down. But what I'm saying is these wild intraday 2+% swings, I don't think is going to happen much longer, or at least the VIX is not reflecting that. So even with the geopolitical concerns, the Fed, everything else in front of us right here, to me, we still may get 1% moves, which historically are big moves here. But the massive volatility, the massive swings we've been seeing, something's got to give. Either the VIX has to go higher, the market has to come down. It has to happen.
Well, good stuff, Scott. Let's talk about the micro, though. We talked about the macro with the volatility. Let's talk about the micro. Walk us through a trade that I believe you have your eye on.
Absolutely. I look at Dollar Tree. They have earnings on Wednesday morning. And yes, a lot of people are looking at Dollar Tree and saying, they're not the dollar store anymore because of inflation. They're the $2, $3 store. And you know what? Not only is inflation pushing up the price of goods, but the discounters like a Dollar Tree, like a TJX, they're dealing with pressure from higher wages, increased transportation costs. All that being said, and I know I'm sounding like I'm so bearish here, I am actually very bullish heading into the earnings print because I think the street is not expecting anything positive here. From a technical standpoint, this stock's about to break out. I'm buying this week's March 4th, expiration on Friday, 150, 160 call spread ahead of earnings, can do that for about $2. I love that because the reward to risk on this is fantastic. And I think the street, the estimates, they're underestimating how strong this stock can be in this type of environment.
Well, Scott, fascinating stuff. Thank you so much for your time. Scott Bauer, CEO of Prosper Trading Academy. Thank you for joining us at Options Insight today. From New York, this is Bloomberg.